Well, as promised, we have the management of KEI Industries now with us. The company announced that its plants at Rakholi and Chinchpada were partially affected because of a production stoppage, because of a labour strike. To talk more on this issue, Anil Gupta, the chairman and MD at KEI Industries, joins us now to talk about that. Mr. Gupta, thanks for joining in. Can you tell us how is the situation right now as far as the labour strike is concerned? When will the situation normalise? And is there any kind of financial impact that you've seen on business because of this?
Good morning for inviting me to the show. The partial strike which has been affected to two of our plants is now withdrawn. Our production is fully restored since yesterday evening, and actually the production started since yesterday afternoon itself, and everything went normal and it is normal. We have already communicated to the stock exchanges about the normalcy of the production and restoration of the production. And it has a very little impact. Close to around 10 crore worth of production is lost in 1 day and 3-4 hours, and we'll make it up.
All right, so just about 10 crore worth production lost because of this strike, so not much in your overall scheme of things. In any case, if you could, reiterate your guidance for this year for the viewers, what kind of volumes are you gunning for? Is there any price hike that you're looking at in the cables and wires business? At the same time, the first quarter, how was that for you? And how is that in line with your guidance that you've given for the full year?
The first quarter, is it in line with whatever guidance we have given in the beginning of this year? And I think everything is going normal. The demand is strong. We have a very strong order book position from domestic markets as well as export markets. And I think that demand traction will continue considering the capex push and investments coming in the industrial projects, real estate, etc. Similarly, very strong demand from our export customers as well, our export markets.
Okay, that's interesting. So, can you tell us this B2C business, you are aiming to increase the B2C business share to 50%. Currently, it's about 45-46%. What is the kind of growth that you've seen there? What's the kind of demand? You just spoke about how real estate, etc., is picking up in a big way. But tell us, what would the contribution be, not just in the next 1 year, but over the next couple of years from B2C? And will that lead to better margins?
See, we aim to, reach to 50% level by end of this financial year. In fact, since all our export business is, growing, and that we classify into B2B. So, and B2C we classify only for our domestic business. So, in fact, the domestic business through B2C should exceed 50% by end of this financial year, according to our estimation. And as far as margins are concerned, I think we have already given a guidance of close to 11%. We will try to improve upon that, but I don't want to, change the guidance.
All right. You, for the top line, had given around 15 to 16% guidance for the year. You believe that that is also, likely to be unchanged for the now?
Yes.
All right. What about, your EPC business? You said that you are looking to bid in projects worth about 500 crores, or you haven't bid much. You've looked at constraining that business to just about 500 crores. Can you tell us why exactly is that, and what's the outlook for this business going forward?
You see, this business can be grown to any size because, there are ample opportunities and ample tenders in this space. We can try to improve it by a few, 10-20%, but we don't want to ramp it too much because of the, normally the cash flow issues in this EPC business from the utilities. So that is the main reason that we contained it, and we are trying to limit it to this level.
And what about exports? What are they as a proportion of your sales? You are gunning for what, 50% growth this year in exports?
Yeah, so I expect that we should get around 15% of our total sales from exports this year, which means that we have to grow by 50% in exports this year.
Okay, you're also expecting a overall 50% growth in exports in FY25, is it?
Yes, exactly.
Okay, that's interesting. And what about your working capital cycle? Where are we at right now? And is there scope to improve the working capital cycle?
It is continuously improving for last many years, and every year we are reducing the working capital days by approximately 8 to 10 days. The reason is, one is growing exports, growing B2C business where we get the money through channel finance from the dealers, and also reducing the EPC business. All these measures has been taken to improve the cash flows. And I think um, if we are able to maintain around 2 months of the working capital cycle in the overall business, we will remain a debt-free company.
Right. Since you're looking to increase your B2C, exposure and your presence out there, just wanted to understand who exactly would be your competitors, what would differentiate your propositions from them, and once competition increases in the B2C space with you coming in, could there be any impact on margins? What's your strategy here?
Normally our competitors in B2C space is Havells, Polycab, and Finolex. Ultimately they are also operating in the similar range of margins. So, nobody would like to reduce their margins by, just increasing the top line. So and we are operating at a very reasonable level of EBITDA. So with the very high level of production efficiency and production economics, I think we will be able to improve our margins year after year in spite of having competition.
Do you have market share targets here? What does it currently stand at, and what do you aspire for it to go to?
Our market share in cables should be around, and I don't have the firm data, but maybe around 12%, and in the houseware business around 6%. So overall market share may be around 10%.
Okay, overall market share is around 10%. Got it. Mr. Gupta, thanks a lot for joining in and speaking to us on CNBC TV18. That's KEI Industries talking about the issues that they were facing at their plant, but also the way forward for the business. They say that there is a big capex push that they're looking at, and demand traction will continue on the back of that. The stock is actually doing pretty well. In the last 1 month, it's gained about 10%. Today, the stock is up 2.5%, and the B2C business is picking up in a big way because of very good traction coming in for wires and cables, especially in spaces like real estate and infrastructure. So that's KEI Industries. Been a big play over the last many weeks and months. And I think if you pull up a 1-year chart, you'll see there's been significant growth over there. But